Markets are way overbought after a strong week last week where Nasdaq was up over 3% and Dow Jones up more than 2%. We are heading into quarter season and this week Tesla will announce quarter results on Wednesday. Will the reduced price on the vehicles hit hard on the profit? That is one of the many questions the analytics are asking themselves. You will know on Wednesday when Tesla will release their quarter results. The same goes for Netflix. I believe that is Wednesday as well, and even on Tuesday and Thursday there will be tons of big banks releasing their quarter results. We are midsummer, it's week 29. You are listening to the StockInvest.us podcast Trading Tips with Jim, and this is the one podcast where we will start the very first trade in the new trading portfolio. As promised, keeping the promise, we will do that. I will tell you one stock which I will buy. We will start the portfolio on $1,000 as most of you listeners wanted, and I will see how far I can grow it, if I can grow it at all. Anyway, it's a new week ahead of us, and as I told you, there is a lot of quarter results coming in. Some of these are expected to come in on consensus, some are expected to come in below consensus, but what you have to understand is that already in advance the quarter results, the expectations for the quarter results have been diminished. They've been lowered to a very low point, except from banks, because banks have really been doing good with all the interest hikes, putting all the costs over on you, the consumer, and just raking in more money. That will be some of the things to follow this week. Last week's quarter results showed that most of the companies came in somewhere around expectations in total. The question is, will this keep pushing markets upwards, or will we have a lateral correction? And if we look at the chart, we go to StockInvest.us, type in the ticker IXIC for Nasdaq. Look at the chart, we can clearly see that Nasdaq is overbought and had a pivot top last week with expectations to go down. I've seen this many times before and it does not necessarily hold true. Markets can just continue to push upwards. Like I told you, when Nasdaq was breaking 13,000, you could expect Nasdaq just to push upwards to 14,000. Now we are just above 14,000 at 14,114 points after gaining 3.32% last week for Nasdaq. The journey up to 15,000 could be very swift, or it could just turn where it is, have a lateral reaction back, maybe push as low as 13,500 or a little bit less than that during the week. One of the things I like to look at to determine the expectations for the week is the amount of buy and sell signals across the board, because that will give an indication how far up we are. And as I told you, if the numbers are above 30, you are in overbought territory, and especially if they are starting to hit some 40s, then we are really up and you can expect smaller corrections down. And this week, across all the tickers that we analyze, more than 35% is buy signal. Last time we were up at this level, there was a major correction all over the line. Nasdaq is at 36, crawling up from last week. It's not very overbought. And if we look at many of the charts at Nasdaq, we will see that the major companies have done really well, but many of the smaller companies have not performed as much. And before doing the podcast today, of course, I was checking the markets, I was checking some tickers, I was looking for one ticker to buy for the trading portfolio. I found it, by the way. But checking all of it, I noticed that biotech sector is one of the sectors lagging, showing some possible signs that they will pick up during the week. Same goes for oil, by the way. Going to New York Stock Exchange, it's 44% buy signals is way too high. Scream correction to me. London 21, London had a hard time at a few weeks. At 21 is kind of a key number, while Tokyo and Shenzhen, China is at 33. So we are in the upward end, but the market, as I say, can just continue to push upwards. There are a strong momentum in the market as is, and if the investors think any of the numbers last week, quite many numbers came in below or better than expectations. Inflation was one of these, and that caused to push the market upwards. So we are still at a place where just a small news can keep pushing the market upwards. At the same time, we can read in the news that, for instance, people are starting to sell off quite many shares, securing their profits. Now, that brings me to the obvious question, so how do you trade in a market like this? First off, if you're not in the market, you can stand to lose out on hefty gains. You saw that when Nasdaq jumping from 13 to 14,000 points, it came very fast. And it may just, as I say, very well be that Nasdaq will push straight up to 15, maybe even 16,000 points. I've seen this before. There is no end if the optimism is strong enough. Now, I like to be a little skeptic. I don't believe that will happen, but who knows, it might happen. So you might want to be in the market if it happens. The best way to secure if markets take a lateral correction down is two things. One, of course, is using stop loss. Secure your profits while you still have them. Use trailing stop loss is the very best of them all. The other thing is to think about your investment, which company you invest in. Make sure that they have strong support below, so if you have a correction down, the fall will not be too hard. If a stock is up 80 or 200% during a few weeks, you can expect the fall to be equal. And that can be maybe the first technical advice lesson for you today. There is something we call one-third, two-third. It's the retraction waves and how stocks usually move. So you can expect after a strong upturn that the stock usually will trace back by 1/3 or 2/3 of the previous upturn before continuing upwards, given it if it is in an upwards trend. It's a number that doesn't always translate to 33 or 66%. It doesn't always work that way, but if you study, you will see that it's quite close. You can somewhat expect, if your stock has a natural correction down, where it might turn for the next upturn. It's a very good way to use if you plan to buy a stock. And with the quarter season coming in, make sure that you know when your stock have quarter results, because that day will for sure affect the development of your stock, either positive or negative. So you might want to be there when it happens. Oil, like we follow, is crawling up. I had a vacation last week, and during these 2 weeks, oil is up at $75 and showing all the signs to continue upwards. Some of the oil stocks are slightly moving, but in general they've been slow, and I think there is an upside in oil. Last week's consumer price index number came in lower, and you can read all over the news. Oh, now we expect inflation to slow down. All of this was very expected out of several reasons. There was a strong dollar for time after all the rate interest hikes, pushing cheaper goods into the country, or import got cheaper. Now we have a situation where the dollar is really weakening very fast. I checked before going online today, it was 1.12 against the dollar, and it was 1.5 just a few weeks ago, and even below 1 just some months back. So dollar is falling quite hard as we speak, somewhat expected as well. And that will cause any goods going into America to be more expensive. Good for the export industry, of course, and not so good for the import industry. And knowing the huge amount of goods coming from China and other countries, I think it is time to expect the celebration of low consumer price index numbers over. I think from this point on, it will start to tick upwards, and that just means one more thing. It means increased interest rate hikes. So we are still not out of the woods, as we say. You have to navigate through all of this. Quarter results will come in, some economic data will come in less than expected, worse than expected. How will the market react to it? The question is, how much have the market already anticipated into this equation? Because many look at the stock price and they think, well, that's a very expensive price for the stock, but you have to understand that everything is about the future. So that is where you have to look. What does the future look like a year ahead? How does it look like 2 years ahead? Because that's where the price of your stock will be. Gold also up $31 for the gold over the last 2 weeks, up to 1,956. I remain bullish to gold. Some of it has to do, of course, with the decline in the dollar, pushing gold up, along with low inflation rates, means that the expectation of the interest rates to go down, also pushing gold in the right direction. I remain bullish to oil and gold, and I've given you a million reasons why I think a part of your portfolio should stay in these two. The rest you have to divide over a bit more high risk. We have seen ourselves how fast and brutal AI has been moving upwards over especially the last half year. Can it continue? Well, at some point the stock is unrealistic on the value, way too high value. You just have to figure out where will that amount be, how much money can a company make? Because in the end of the day, it all comes down to the price earnings. In the beginning of a company life cycle, you expect the future. You don't look at the numbers. We've been doing that for Tesla for years and years. We haven't been looking at the profit numbers. We have been looking about the market size, about the potential for future income, and pricing Tesla up at insane PE values. I think it was up at 1,400 at one point. And if you go to a typical industry stock, the PE ratio is usually around 10 to 15 price earning. It's just how much money it will take from the company's profit to pay for it over a certain amount of years. Now, as a company lives on and years pass, you look less on future expectations and more on how much the company is actually making today. And sooner or later that reality will hit Tesla, and it will also hit AI companies. What is the realistic income in the future for these companies? Could mean that AI can go 3, 4, 5, 6, 7, 8, 9, 10 times more than current value, especially new companies coming up. And that will be the last lesson before we look into the new trading tip portfolio. I have a quick talk about the Mega Shark Trader, of course, the boot. So that last lesson will be if we do understand that starting up a sector is very, very costly. Many of the AI companies that started off, they have taken tons of cost getting into the position where they are. And usually some of these companies will not survive because there is something called copy-paste. China is the expert of copy and paste, where other businesses come in, they copy your business model, maybe even your product, all the way down to the last comma, and spend much more money on smart marketing to release their products. Any of you following AI maybe have seen how OpenAI and ChatGPT were alone in the beginning and now is just flushed into the market with competitors. And I personally will not be surprised that if in a few years we will not talk so much about ChatGPT, it might be a new company coming up. So if you're scanning for stocks, future stocks, you might want to have a look into companies that possibly can become these super growers. And how do you find them? What are the characteristics for these stocks? Well, very often they are backed by solid old money, meaning that either big funds or very wealthy people go in, support a startup based on an existing product model. They have the knowledge, they have the money, they have all the connection needed to do a swift market entry and capturing market shares in a growing market. While much of the other startup companies already have spent tons of their investor money into developing the product, these companies will spend them on marketing, growing fast, taking their share, and very often they start strong on into profit. They don't have too many years of reds. They go into a good position, a good market start off with small profit early on and get a high price valuation. I haven't checked which company it can be, but it could be a task for you to check out if you find any of these companies that can get into the AI space and utilize the insane growth which currently is there. I would especially go for companies backed by what we call old money that's been generating from other businesses. The expectation for the market and the week ahead is that currently, as we speak, is very overbought. It should have a correction downwards. Could be only a few days, 1-2 days, and the rest of the week will be very green. So we can end in green, but I hold a bottom on a total red week. But there will still be some options where to put. And of course, some small news, some quarter results better than expected can fire up the market and you can have an ongoing rampage. Hopefully you were able to take my EV advice, enjoying that extreme strong upturns in EVs, everything from Rivian to Neo. Looking at these charts, everything indicates that they might have a slight reaction back, trying to find some new grounds before going up. So they're still in a very good position for future growth, but it might be that they will have a reaction back. Personally, I am into EV as well. When I say it's a good opportunity, I usually do it myself. Into this, got into Neo down at 7 and currently enjoying that ride upwards, but expect a reaction backwards. We will see how strong it will be. Over the last half year, I was talking more and more about ending the previous trading tip portfolio, which we know did extremely well, because I said I want to do an even more aggressive trading portfolio, start all over again, so most of you who want can follow it. I asked you on YouTube, where should we start this portfolio? Should we put in 1,000? Should we put in 10,000? Should we put in 100,000? Where do we want to start a portfolio? The overall of you said $1,000. I'm very happy about that, because it's an amount that most people have a chance to follow if they like to follow. I started my journey with $450 about so many years ago. I was able to grow that very, very high, and I always wanted to see if I can repeat it. Not sure I will. Who knows? I think it is a time of the market cycle where somewhat similar to the last time, where it can be made. So just to give you an idea what I will look at, because I know many of you are listening to this on Spotify and audio devices and not looking at YouTube, etc. I will try to explain it also. Try to explain it somewhat visual in a way that you can visualize it yourself. The very optimal choice which I want to do is stocks which have been hammered by relative strength index. They've been falling very fast, have a huge increase in volume, and that usually means that there will be a reaction upwards. On the screen I put up the chart for ICPT, Intercept Pharmaceuticals, because that's the one stock I will try to do a trade on. As I told you, I would love to go for stocks heavily oversold on the relative strength with increasing volume, and if we go back to May, we can typically see where I want to do the trade. Here we can see the stock was falling very fast from $16 all the way down to $9.17. Was very oversold on the relative strength index at 13. You saw the huge increase in volume. It's called a sell-off, and you have a reaction up. Stock went from 9 to 12, so that's more than 30% gain on the upturn. Now it's been falling back and is not by any means that classical stock to buy. I had a look at more than 100 stocks this morning, trying to find that ideal stock which I wanted to buy, but couldn't find exactly what I was looking for. So I was thinking maybe I should wait, starting the trading tip portfolio next week. But then I thought I will have to find something which I think can do good using a little bit other criteria than the one which I really wanted to do. But the main for this trading tip portfolio is we will try to find the stocks which have a huge fall, followed by the increase in volume being oversold on relative strength index. That will be our main strategy moving forward. Usually these stocks, and especially if they have support below, offer good strong returns. And when we start with $1,000, you have to understand that on my overall portfolios, I'm very happy with 3% gain in a stock, because it's really good when you think that you can only get 3% in the bank. So 3% in just a few days or a week is really good return. Now here we are trying to do something out of another world. We are trying to grow very fast, and to do that we have to take higher risk. It's just how it is. So do not be surprised if we miss a little bit. The reason why I would go into Intercept today is because it has a buy signals from short and long term moving average crossing each other. Is called golden cross, but it also has a golden star, my own signal released. These are not the best that I have seen at all. May turn out false, but there is something which appeals me. What worries me the most is the resistance around 1180. That might be challenging, has some good support below. So I think that even if we get into a little bit scary market, I think there are some good opportunities ahead. It was when I was looking at the 12-month chart, it became more clear to me why I would try to go. And that is because in the 12-month, it is clearly oversold on the relative strength index. And usually you can watch the chart yourself if you have a chance to watch the YouTube version of it. Or just go to stockinvest.us, type in the ticker ICPT. Intercept, you can see for yourself. It was oversold back in early June, had a very nice upturn, as we just said. It was oversold in April, had an upturn from $12, almost $13 to $19. You can see the pattern, so it follows a very nice pattern. The trade that I will attempt to do is to see if I can squeeze out anywhere between 20 and 30% in this stock. Anywhere close to 14 I would sell. I would say even just about 13.50 I will be out. I think it is possible to do that on the trade. Many of you are asking me, either sending me mail or messaging on Discord or whatever it is, so how will I actually do it and how can you follow the trade? And as I say to all of you, I will try to explain as much as I can. I think markets are heading for a red opening. I think it will be somewhat hard opening. I think that may push the stock a little bit down. Could be even today or tomorrow. But it looks to me like I might try to put the trade today. And we will see if that will be good. Stock is currently trading at 11.29. So let's say that if I'm lucky, I will be able to get the stock around 11. So that's where I will try to get in. I will see if the open is much harder and the stock has for some reason a fall down to 10.50. Then I will do that. That obvious very good buy is actually down at 9.70, 50, 9.50 around. So if it falls down there, and it may very well happen, it should bounce upwards. That is the downside risk. So the downside is more than 20%. So you see, we can lose heavily on the money if we are wrong in this case, but I would try to get in around 10. I think it will kick off. There is nothing in the volume as is showing that it will kick off early in the week. So it might be delayed kickoff, meaning that it could be just a slow movement all week. You don't know exactly when and where it will go in with an upturn, but usually you get a sign in the volume, and in this case there is no really sign in the volume saying it's only that it's being close to oversold, has some room for some more downturn before going up, and I will try to hit that downturn. So to sum that up, I will try to get in. Personally, I think that the low, it's a bit hard to say exactly, could be around 10.50, and I think that the upside is upwards to 13.50, maybe even 60.70, somewhere up around there. Could be on a wild ride up to 14, but it has to have huge momentum to break upwards to 14. I am hunting the 10, 20, 30 first percent here. That's what I want to do. And I will sell if it gets upwards just about 13.50. I think that I will sell around these numbers. So this will be the first stock. It is absolutely not the stock I wanted to start with. We may be off for a loss in the first trade. We will see what is correct or not, but it was the best alternative from what I saw. There are some things which is appealing, but tomorrow we'll for sure start to give a sign if we are correct or not. So intercept will be ICPT, will be the first stock I will try to trade. I expect that it might start off a little bit slow, so do not be surprised if that happens to be the case, that it will not like kick off with insane profit from the very first fly. There is a great chance that we will run into a downturn. I hold the chance reasonable. If the markets turn very red, could be some bad quarter results coming in. It will drag everything down, and it may very well drag this stock down. We will see how it will play out. Now you will be wondering, should I join this train? Should I not join this train? I tell you, this is not the optimal stock I wanted to buy. I couldn't find anyone better. The ones that I found which looks better, they did have like 5% upturn potential or 7% upturn potential, and to really grow very fast, very hard, we need more than that. That is why it is, as I say, a high risk portfolio. So you should think about that yourself. This is high risk and high risk only. I might, if I remember, put out the exact amount on YouTube on the commentary field when I finally buy the stock, but I expect it to be somewhere an hour after opening or something. I will watch a little bit how things starts to move, where it's possible to get, because we will try to get this as cheap as we can. That stock will mark that first stock, that very first journey on this trip, where we'll try to grow $1,000 as much as we can and as fast as we can. Hopefully it will be a success. Done it once doesn't mean that I will be able to do it twice, but you will be able to watch my journey every Monday as I will tell you how it went and what is the next buy I will do. I will only do one buy per week, so you can follow it 100%. Normally I would do when I see them pop up and trade like that. So, but we will try to keep it only on Monday, so you can see exactly what I do before I even physically do it. The only thing that you will not be able to see is when I sell, and that part is, as I say, it will be in this case when it getting close to 14, 13, 50, 60, 70, somewhere around there, I will be out. We'll end this podcast with the boot, the training boot. Just a short summary. As I told you, I had vacation, meaning that I was not able to do much, didn't have time to do much on the boot. The boot is ticking by itself and it's slowly ticking upwards, yielding profit. Happy by that. The profit is very, very slow, but it's ticking upwards. We already netted more than $838 or $40, if I'm not mistaken. Let me just check quickly. $887 of pure profit has been netted already into the portfolio. All the stocks, even Lucid, which was the first real wrong buy, but that was because some of the programming behind was a bit sloppy, causing the stock not to be sold by stop loss. So we had to take a huge loss in Lucid. It was down $200, but the later trades have made for that. Currently, I realized $64, almost $65 in Lucid in profit. The winner so far is Microsoft, still at the top with a profit of $243. And in average, we have never used more than $10,000 to do this. Most of the cases only around 2 to 4,000 is invested at any given time. You can follow it at getagraph.com. Shark is the name of the trader. You can follow that. I post all the comments, all the changes I do, so you can follow it yourself and see. And the latest updates was just a few days ago, where I posted that I upgraded to Hindi language as well. More languages included is a part of the strategy. The overall purpose of this trading boot is make a trading boot as easy as I can, so that anyone can use it. It will have some settings, and you can watch the video on the page showing the admin side of it. And I will grow these, and one of the things that I will grow over this week, I will include a little AI into the boot. That part, which I think, because you have to realize that you cannot just ask, for instance, OpenAI, is Tesla a buy? Because it doesn't have the data. You have to feed it tons of data, and currently, the way they analyze things is very, very simple. It's regression analysis and a few other things. It's nothing very special, but has the ability to also look at news and come up with some idea. That part is still not, in my opinion, a good approach for stock trading. It will be as they grow, because more and more AIs with statistic capabilities are being released, so we are getting closer to where you can do it. But what I want to do with the AI is to let AI see all the returns on all the trades that I've done and come up with suggestions. I will add more data to it, but give it the option to check the portfolio and suggest changes, which stocks should go in and out. You can program all of these things yourself. It's not too hard. It's just a long journey where you look at anything from standard deviations between the returns, what trend the stocks are in. But as I said, there are getting more and more of these things in the AI world already in the boots. So you just have to feed it your data, and it will do the math and the statistics itself. And I want to see how that turns out. Is it usable as is? So if not this week, but very soon, there will be an option to tick let AI decide your portfolio, where it simply will tick in and out stocks from your portfolio as it see they are either not performing, whatever it is. So that is one of the things to come, the biggest step of all of them, and when I really believe there will be huge gains, could be huge losses of course, is when I put through auto trading, meaning that it is selecting from the stocks which I put in, but when it looks through all my signals, because I do signals for all stocks at Nasdaq that fits a certain criteria, just picking the stocks automatically which to trade based on their performance. This is halfway done. I'm halfway there, and will come, and I think that will be the most exciting thing which I do with this boot, where the highest potential for success is. In the meantime, it is live, it is trading, is ticking. You can watch the stock come and go on the page as it buys it, and as it sells it. You will even see the trailing stop loss, how it updates during the day. And the trailing stop loss made for much better average return on the Mega Shark trader. So that made for this week's podcast. Not too much useful information for you in this week's podcast. Hopefully I will come back a bit stronger, as I still is in a little bit of holiday mood. But we mark the beginning of the new trader portfolio. I hope it will succeed. First trade, not as sure as I should be, but we will still try it just to get started. And in the meantime, the auto boot is trading profitable, and I believe much more is to come from the boot. You can follow this and so much more on my testing pages, which you will find getagraph.com, stockinvestor.us are two of the pages, even forstarter.com. I test different concepts, but the main page is, as always, stockinvest.us. As I develop things and things are of a certain quality, we try to move it over to StockInvest, but you can be the very first to follow all the changes. I hope you have had a beautiful summer so far, and that it continues to be beautiful. I hope the weather will be good wherever you are, and that you will be back next week when I will be back with updates on the very first trades and tell you what the next trade, if there will be a next trade, because it might be that the stock still will be in the portfolio, but we will know that in just a week. Until then, have a super week. Bye.
Welcome to StockInvest.us Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling.